Hi, everybody. Welcome to the Next 2020. My name is Gabriella Heiser, and I'm your host for this show with the Boca Raton Tribune. Today, we're going to be talking about real estate, credit, and lending with three phenomenal people who I'm excited to bring on the show today. So without further ado, let's bring on Bogan, Michelle, and Doug. Hi, guys.
Hey.
Hi.
Welcome.
Thank you for having us.
Of course. We're very excited to get started. So let's get started. I know you guys, I think you guys are great. I'm excited to have you on the show. So let's just start out talking about yourselves a little bit, just so the viewers can get to know you and know who you are and what you do. So let's tell the viewers where you work, what you do there, and what you love most about your job. So Bogan, let's start with you.
Cool. Yep. My name is Bogan Stitzel. I work at A Better Life Realty. We're based out of St. Petersburg, Florida. I am our lead buying agent. I've been here since 2017. So my main duties are to work with all of our buyers. That includes investors. I have some experience with flips as well as rentals. So we do a little bit of everything here. But yeah, I mainly work with our buyers and our investors here at the brokerage.
Awesome. And what do you love most about what you do?
What I love most about what I do is really all the great people I get to meet. I mean, you'll get to meet Doug and Michelle, who are people I've met because of being in the industry, but just the relationships I get to meet with buyers. I love being out about, a part of the community, and just the cool opportunities like this that I just get to do. It's a really unique job.
That's awesome. Michelle, why don't you go next?
Okay, so I'm Michelle Clark. I am a Florida native, and I work for Rising Point Solutions. We're a credit repair company. We really pride ourselves in not only helping people to fix their credit, but also giving them education and resources, so that way they have the opportunity to have good credit for life. I am the Florida Regional Manager for Rising Point, and I would say it's very easy for me to say what my favorite thing about the job is: being able to help people. I get a lot of people that truly, truly need and want the help, and it's very rewarding.
That's awesome. What about you, Doug?
So my name is Doug Wagner, and I work with Cross Country Mortgage as a mortgage loan originator. And my main focus is really helping people with buying, new homes, whether it's a primary residence, a second home to vacation in, or rental properties to invest in. And we also help people with refinancing all of those different types of properties as well. I got started in the industry just a little over 10 years ago. And I would say my favorite part about what I do, there's a couple things, personally, some of it is just the daily challenges. And also it's, helping people get somewhat difficult files taken care of, people that have a little bit more of a complex situation, buy a home, refinance, whatever it is. And it's also just a very rewarding feeling that you get when you do help somebody make one of the biggest, purchases in their life.
Right, for sure. Mm-hmm. And congratulations to you, Doug. He just had a child, a baby girl, right?
Yep, that's right.
Congratulations, just so the viewers can know this. It was this week, and he's already working. Look at that. They really do love what they do. So let me ask you guys, have you guys always wanted to do this, or what made you want to pursue a career in this?
Personally, I definitely liked the industry always, but I didn't realize that that's what I was going to go into. I knew I had always thought sales. I had the personality for sales, and I just liked that. I actually thought I was going to go into either medical equipment or pharmaceutical sales, though. So I basically have a pre-med degree. I have a health science degree. My concentrations are public health and healthcare administration.
Wow.
So about as far from real estate as you could go. And then I actually just kind of fell into it. The last 2 years of college, I started doing property management and just absolutely loved it. I was managing about 90 single family homes. And it just kept me super busy. The people I got to meet, the opportunities I got, the stuff I got to do, I just kind of got hooked, and I got the bug. And I got my license. I couldn't get out of it. I never even applied to a medical equipment job or anything else. So about halfway through college, I did know, but it was very far from what I originally expected.
Yeah. Wow. That's crazy.
Yeah, I being the age that I am, I can say that I've been in sales for over half my life now. And I never in a million years would have thought I would been in this credit repair realm, working with realtors and loan officers to help their clients. I actually worked for Nordstrom for the longest time as a personal shopper. Then when I quit there, I started my own business doing the personal shopping on my own and like closet edits and stuff. So far from this also, like Bogan said. But one of my good girlfriends who was also born and raised in Tampa, she moved to Austin, Texas for a boy. And it worked out. Don't worry, guys. But she was a loan officer and worked with my company and got her hooked up with a job. So every time she would come back into town, whether it be for Christmas or an engagement party or whatever, she would talk about how great it was, how the company was wonderful and it was great to help people. And I'll never forget, we were on our way to Miami once and I just kind of kidding around. I was like, well, do they need a Florida rep? 2 weeks later, I was flown to Texas for training and 2.5 years later, here we are.
Look at that. That's crazy.
Yeah.
For me, I would say I kind of did always want to do this. The way I say kind of is I didn't know what the job really entailed. You know, growing up, I think that having some type of job where you were a banker or in the financial services, the idea of wearing a suit seemed very exciting until the first time you wear a suit in Florida and you realize how freaking hot it is. So I'm glad that I don't have to wear a suit. That's one of the positives. You know, it's a pretty casual dress code, but no, other than that, I kind of always wanted to be involved in some type of financial industry. And I started while I was going to college, working for a mortgage company, kind of at the ground level, helping other loan originators with their files. And I just, you know, kind of realized that, you know, with a lot of jobs, friends that I have will say, you know, you go to work, you put a lot of effort in, and you get to keep your job. Mm-hmm. Where with what I do, you really get what you put into it. And the sky is the limit with, you know, how big you can grow your team, how many people you can help. And so that's kind of what I think it's the daily challenge of just trying to do better than you did yesterday. And so that's why every day, you know, there's just more left over to work on.
Yeah. Wow. That's awesome. And someone commented that it seems like you guys are all in the business to help people, and that's great. Fernando, I agree. Like everything they're saying is really incredible, and it's very different than what I expected, honestly. You know what I mean? So kudos to you guys and doing great things. What is one of the biggest challenges you guys faced along the way in your career? And most importantly, how did you overcome that challenge?
Michelle, I can go first with that.
Go ahead.
I would say one of the biggest challenges is feeling that you're trying to live up to your clients' expectations. And I think the way I just overcame that was just realizing that, you know, as long as you show up every day and you're honest and you truly come from a good place. And what I mean by that is, again, like trying to help people. You're not being salesy. You're not doing it just to make money. That's when it kind of took that pressure away. So, you know, today I show up to work and it truly is just about helping people. You know, it's not about getting an extra deal or, you know, forcing someone or trying to sell somebody on having to work with us. You know, I encourage people, shop around, look at my reviews online, and it just takes the pressure off. So I think that was the biggest challenge for me, is living up to other people's expectations.
Yeah.
So I'll go next. My biggest challenge is credit repair is not a sexy thing to sell. There are a lot of shady companies out there, and my company doesn't do any direct to consumer advertising. You know, all of the people that come to me are referrals from relationships I've built. And, you know, I've had to earn the trust with people like Doug and Bogan. And that takes some time. You know, you could be as friendly as I'll get out, but you have to earn that trust for them to send that client to you.
Yeah. I think, you know, one of the hardest things for me, and I always joke, like the best and the worst thing about this industry is that you create your own schedule and no one tells you what to do ever. And it's really hard to get used to coming from like school or coming from like almost anywhere else. It was just really kind of weird, and a realization that you have to make early on if you're going to last in the industry is like, you got to figure it out and do your own thing, because no one will tell you what to do. You might get a good mentor, but it's a little different for everyone, and you've really got to be self-motivated.
Yeah, definitely. And what would you guys say would be the best advice you give to someone if they were looking to do what you're doing right now?
Yeah, I can start off with that one. Be prepared to fail for a little bit. Like, it's a lot of no. All sales is, but it's not personal. You can't get your feelings hurt. And if you're going to come in, have a reserve fund, have an emergency fund. I mean, I think I tell all new agents that are joining the brokerage that I mentor, like, are you prepared to go your first 6 months without a paycheck? Because realistically, that's probably what it will take before you find your first client. And sooner or later, it snowballs, and you've got more business than you know what to deal with. But you have to be able to make it through that first time. And the first year, I think it's like 95% of realtors drop out. I have a friend that just joined. Her class of realtors was 50 6 months ago. There's 4 left now. And I was joking with her, statistically, that's still too many. And she told me, she's like, that's funny you say that. Just last week, 2 of them told me they were thinking about quitting. And it's a really hard industry. So you have to be ready and you have to be committed. You got to be a grinder and you got to have those reserves.
Mm-hmm.
Well, and I think with all of us, being that I get my referrals from the real estate industry primarily, and these guys are in it, there are waves too. I mean, there's historical times during the year where, you'll have next to nothing in business. But I think advice wise for anyone trying to get into what I'm doing is honesty. You have to be super honest. If you're not going to be able to help somebody, you just need to tell them that. And set up reasonable expectations. Also let them know what's going to be harder, what's going to be easier, and be very frank with them on what they need to do on their side as well. So honesty.
Yeah.
It's so hard to give advice on how to get into what I do, at least. My brother just started working with me a few months ago, and we're fortunate enough that we are busy enough to have a need for, like I was saying, how I started out being more of like an assistant for other loan originators. That's kind of what his role is now. And I mean, he's doing great with it for sure. And I think that's the best way to start out, is to kind of have somebody as a mentor to show you how things are and what that process is like. Once you get into a position such as the one that I'm in, a book that made a big difference for me, and I think that was one of the turning points in how I approached just the industry and things overall. It's called The Go-Giver. And it starts out talking about a guy who's in some type of sales business and how, he's making calls and he's pushing hard to, get business in the door. But then there's this other guy who does not push hard to get business in the door, and he has more business than he knows what to do with. So the guy goes to him and says, what's the secret? And the successful guy says, there really is no secret. You just have to give more than you get, and then you'll end up getting more than you know what to do with. So for me, one of the things I started doing was working with different groups of agents and agents one-on-one. Me and Bogan got together years ago, and I talked with him about it. And it's like, I don't have all the answers, but at the same time, if you can meet with people and find out, what their challenges are and maybe try and help them one way or another, it's the law of reciprocity. What you do for others, others will probably do for you. And so that would be the advice I give. Read that book, The Go-Giver, and try to find somebody that can, have you as some type of assistant in this industry.
That's awesome. That's awesome. And I mean, how would you find mentors specifically in your field? I know that's a big thing that people talk about, getting mentors and things like that. But I think it's also kind of hard sometimes when you're in it and you just feel so small and you're like, how do I do that? How do I get that? Do you have like any recommendations for someone who needs help with that?
Yeah, definitely. So like right now, the mortgage industry, we're doing more business than we can possibly handle almost. It sounds crazy, but literally interest rates are so low right now that if you have a mortgage, you could probably benefit from refinancing. And in addition to that, there's so many people buying houses right now. Mm-hmm. I only have so much capacity. I can only talk to so many people. And I'm not the only person in the industry that's going through this. It's an industry-wide capacity challenge that we have. So right now would be a good time to post a resume, on something like Indeed or Monster, something like that. And again, so many people are buying houses. ask one of your friends, who did you get your mortgage from? And, you know, if it was a credit union or maybe a bank, maybe that's not the type of place to get that mentorship. But if it's someone that was a broker or a direct mortgage lender, like what we are, that's where we have the ability to more so customize how we set shop up for ourselves. And again, the biggest challenge I have right now is having enough help to handle all the business. Truly. I mean, that is the biggest challenge. So to do that. And then I've told people this before, you don't know who's watching you. So whether you work at Starbucks or you work at a restaurant, I've asked people that work in, you know, different, you call it what you want, restaurants, fields, whatever. I've asked a waitress for her name and number, with my wife being there, just to say, hey, you've been amazing. What is your contact info? Because we're really busy and we could use help, especially with somebody that has customer service skills like you. And that's what a lot of it is. It's really just customer service. You don't need to know what the guidelines are for this loan product versus another one. You can learn that over time. And I'll finish by saying, you can train somebody on skills, but you can't train their character. So again, if you're a good person, you're showing up to work every day, you don't know who's going to be rolling through the drive-through at McDonald's. If you work at McDonald's or Starbucks, or if you work at a restaurant, you never know who you're going to be serving. That might be in a situation similar to me where they're like, that's a good person right there. I see potential in them and I want to give them a shot.
That is great advice.
Mm-hmm.
Yeah.
Yeah, you know what Doug said, and I think hospitality and retail are great, like stepping stones into things that we do, because you learn a lot of the customer service, like building blocks, you know?
Mm-hmm.
Yeah. I would also tag on with just ask. I mean, there's a lot of us that are more accessible than you'd think. We're all super busy right now. But most of us are pretty nice people. And if you just offer to grab a cup of coffee or anything like that, a lot of us are really accessible and we'd be happy to sit down with you and talk with you about that. Most of us are trying to build out a team and grow. And especially right now, we are busy than we know what to do with. And so if you have that personality and that ability just to ask, you know, that's a lot, 95% of the time, that's probably the biggest obstacle is just you never asked. So I would throw that out there as well.
That's good. That's great advice you guys are dropping about. I'm like taking notes as I'm listening. So I know we had a question in the comments that I want to get to. Fernando asked, what type of customers are you guys getting during this crisis?
So it's hard to say what kind of customer, because it's almost everybody. Let me just start out by saying how strong the housing market is, and it's because of the first-time home buyers. And so if you look at the amount so first of all, the median age of the first-time home buyer is 33 years old.
Wow.
If you go back in time 33 years ago and look at how many people were born, there's a exponential growth in birth rates for about 4 to 5 years starting 33 years ago. So what that means is, as people are coming to the age of wanting to buy homes, it's going to continue to fuel that demand. And that's the basic, laws of economics, is supply and demand. There's only so much land. They're only building so many houses per day, and it's not enough to keep up with the demand that there is. So in so many ways, it is causing home prices to go up, in addition to interest rates being low, actually at their all-time lows, truly. Mm-hmm. And because of that, so now people that bought their house, whether it was a year ago, 2 years ago, 5 years ago, whatever, because home prices keep going up, there is so much equity people have in their houses right now. It's unreal. So we're helping people that are, in their 20s. We're helping people that are in their 60s. We're helping people that have jobs. We're helping people that are retired. We're helping veterans. We're helping civilians. I mean, we're truly helping just about everybody. As long as you have decent credit and predictable and reliable income, there's a good chance you qualify.
Yeah. The majority of the people I'm seeing are first-time home buyers. I would say 9 out of 10 people that I'm calling. And the interesting thing is, for me, there's not any kind of set age range, I could tell you. I mean, it's a little bit of everybody. And I hear on the phone multiple times a day, it's time to get my act together. I want to do this. I need to get my credit right. I want to buy my first house. It's time to grow up. And it doesn't matter what age. It's almost all that kind of storyline.
Mm-hmm. Yeah, I'm definitely on that same boat with the first time home buyers. The other thing I would say I'm seeing a lot of, which has kind of changed over the last probably year or two, is a lot of the investors are going to a buy and hold strategy. The fad for everyone was, turn and burn flippers, just get it done as fast as you can and sell it. Now I'm seeing a lot of people come in, make some renovations, rent it for 1 to 2 years and let that appreciation come up, build some equity in the property, and then start to let it go. We're seeing really good returns with our investors doing that. And so a lot of my people have started to transfer to a more buy and hold strategy. So like renting is getting really big. There's a lot of people that are buying rentals for me right now.
That's awesome. We're going to touch a little bit more about the pandemic and dive deeper into the whole industry as a whole. But before we do that, I want us to break for commercial real quick, and then we'll come back and talk about all of this stuff.
Cool.
Awesome. Awesome. Welcome back, guys. Welcome back to the audience. I hope you stayed on with us. And if not, I hope we got new people on. So now I really want to transition a little bit to talk about the industry as a whole, and stuff about the pandemic, and just go deeper into that, because it's uncertain times, as we know. So it's important to talk about it and have everyone know what's going on. So my first question to you guys is, do you recommend young adults to buy property? And what would be your advice to someone who's looking to buy property? That was 2 different questions. I'm sorry. Let's take one at a time.
So I would absolutely recommend it. The reason why is because, I tell people all the time, you're going to pay for housing one way or the other. You might as well pay for your own, as opposed to renting. Now, if you have to rent because you need to save up for a down payment, or you need to work with Michelle to get your credit score up, that's okay. But again, owning a house is something that I think is going to help you build wealth. Historically, even with the booms and busts that the market will have, real estate goes up 3.5% to 4% annually. And when you get your mortgage, you're paying that balance down. So I don't really see how you can lose. People do talk about how you have to handle the repairs of the house, and that's true, as opposed to when you're renting, you just call your landlord. I'll tell you right now, I would much rather pay for a new roof once every 20 years and have someone pay my mortgage off than be in the opposite situation. And then as far as how the pandemic has affected things, one of the unfortunate things is there are tens of millions of people that have lost their jobs, right? And it's happening to people in plenty of different industries. So that has had a negative effect for sure. But one of the positive things is it has caused interest rates to get to a level that they've never been at before. I cannot tell somebody what rate they're going to get, so I'm not quoting rates for anybody specifically. And you do have to have great credit to get what I'm about to talk about. But I literally just locked in somebody's interest rate the other day. Granted, they had darn near perfect credit and they were putting 30% down, but they were getting like a 2.75 or a 2.6, something crazy like that, percent interest rate, fixed rate, 30-year. and maybe I'm wrong for looking at it like this, but the way I look at it is if your interest rate is, 3% or lower, and if historically real estate goes up 3.5 or 4% annually, I feel like you're borrowing the money for free at that point. And again, that's just my opinion. I have not busted out a calculator to see if the math really works that way. But saying it, I mean, it sounds legit. It makes sense. So, there's been a lot of good things that have came from it for sure.
Yeah, I would say, it really depends on your goals, whether or not it's the right time to buy a house for you. But again, if you're trying to build wealth, if you're looking to stay in place, it really, really makes sense. Really, the people that I'm telling that it doesn't make sense are people who are trying to go travel and don't want to be around for a while. They don't want to manage that. Or again, they're just not ready yet. They don't have the money or something like that. So it's not an opportunity for them yet. But I mean, if you're ready to lay down some roots, it definitely makes more sense. The exact same house as a rental versus the mortgage that you would pay on it, you're automatically saving money. And again, with rates so low, I mean, it's almost paying for itself.
Yeah.
It's crazy. So yeah, I would say most of the time, yes, it depends on your circumstance, but yeah, probably.
Michelle, do you agree? Do you not?
Oh, I totally agree.
Okay.
I'll even put it into blunter terms. Why would you pay someone else's mortgage when you could pay your own?
Mm-hmm.
Yeah, unless, like Bogan said, if someone called and said, "Hey, Doug, I think I'm going to move from Florida to wherever," and really just move in general, 6 months or a year from now, it probably does not make sense to buy a house, because when you buy a home, there's more to it than just a down payment. There are closing costs. And then when you sell your home, there's closing costs. So although in theory, the home should go up in value and you're going to pay down the balance that you owe, causing a spread of equity to happen, that takes some time to do. That being said, for me, I've lived in St. Pete my whole life and I don't plan on leaving. And so for me, buying my first house gave me the stepping stone to buy my next house. And if I had not bought the first house, then I wouldn't have the down payment necessary for the second house. So we're helping people buy their first home, sometimes with just 3% down. So you buy a $200,000 home, that's $6,000 for your down payment. And maybe that's all you have, that's fine. But then 5, 6, 7, 8, 9, 10 years down the road, now you have a growing family and you need to buy a more expensive home. Well, depending on how many years have gone by and you have that much more equity, that could allow you to put down 10, 15, or 20% on that bigger, nicer, more expensive home. If you kept renting, you're not going to have that equity. And then I know Bogan, Michelle, we can probably all attest to this. Rent today costs more than rent did 5 years ago. But if you bought a house 5 years ago, your mortgage payment is probably still the same.
Huh. Interesting. Why do you think that is?
Well, just because, if you're getting a fixed rate mortgage, the only thing that should really change, if it even does, would be your property taxes and maybe your homeowner's insurance. And with that being said, your property taxes, once they do adjust after you've bought the house and you file your homestead exemption, that's what your homestead exemption is for, is to prevent your property taxes from going up and pricing you out of being able to afford your house.
Mm-hmm.
Oh yeah.
So that's the thing. It allows you to plan ahead easier and to just be financially more stable. You know what your mortgage payment's going to be 5 years from now, 10 years from now. If you're renting today, you don't know how much your rent is going to be 10 years from now.
Well, and I think rents are especially going up in Florida. Before COVID, I read a statistic that in all of the U.S., Tampa and Orlando areas both rank in the top 5 for cities being migrated to by, other people in other states.
Yeah, an article I had read. Sorry.
No, you're fine. You're fine.
No, I was going to say I had read a similar article. Like Florida was the #1 state to move to, and the Tampa Bay area was the #1 place in Florida for people to be moving. So it's just a demand thing as well. I mean, there are so many people here.
Mm-hmm.
It's just, yeah.
Interesting. What would your advice be to someone who is looking to currently either purchase a home or a property, or like land, not because a home is a property.
Yeah.
I
mean, my first advice is get pre-approved. The market is insane. And if you are not sitting there ready and waiting with all of your documentation, you're going to be too late. And I'm sure Doug can attest to that too. If you don't have your pre-approval, I in good faith can't even show you a property because there's a chance it's sold before we get to the front door. I was just out with clients earlier this week. I mean, they sent me like 7 or 8 the night before, scheduled them all for the next day, and 4 of them were pending before we could get there. 1 of them went pending while we were out and about. I mean, the market is just hot, hot, hot. And if you're not ready, you're going to miss it.
Yeah, and you need to be aware of your credit score also. A lot of people are on a lot of different credit monitoring sites. I'll throw out Credit Karma out there as one of them. And it's a good thing to be monitoring your credit, but a lot of these sites are not showing you a mortgage score. A Credit Karma score is what's considered a consumer-based score. It's not a FICO score, and it's certainly not a FICO mortgage score. So you need to go to a reliable place, whether it be you talk to a loan officer or you go to myfico.com, but, get a hold of where your credit is. And for credit before getting a mortgage, don't go car shopping or, get a loan for furniture for the house you don't have yet. Chill on the inquiries for like 90 days before.
Yes, please, please, please. I've had too many deals fall apart because of that.
Yeah.
And I would say what both of them said is the best advice anyone could give. The 3 main things, and we might talk about it a little bit later, so I won't go into it right now, but the 3 main things when you're getting a mortgage is credit, income, and assets. So I think using Credit Karma to just track your credit score is fine, but just because Credit Karma says you have a 650 or a 700, whatever credit score, we usually pull a lower score. Sometimes it's only 5 points lower. I've seen it as low as 80 points lower. Maybe the other person that was telling me what their score was, maybe they were wrong. But if they were telling the truth, I've seen it be a 80-point difference.
The most I've seen is 100-point difference between Credit Karma and a mortgage score.
And it makes people upset. A lot of people are proud of their credit, and then I pull their credit and I say, your credit score is not a 680, it's a 580. And, because of that, your interest rate's higher, or maybe you don't even qualify because of it now. So, credit is one of the most important things. And then outside of that, I think like what Bogan said, there's really nothing fun about getting a mortgage. I'll be the first one to admit it. And I joke with my clients and say, I get it that this is not the fun part of buying a house. I'm in the industry, and when I buy a house, I don't enjoy going through the process either, right? And I know what's needed to get it done. I'll have it already ahead of time. Buying the house is the fun, the sexy, exciting part of the real estate transaction. But what people do is they start looking at homes with a realtor before they have their financing in line, and it just doesn't make sense.
It leads to heartbreak all too often.
It does, because the reality is I cannot pre-approve you in 5 minutes. You can ask a loan officer, how quick can you pre-approve me? If someone asked me that, I would say I can get you pre-approved in an hour if I already have your application and all of the paperwork I'm going to need is in front of me. We might not know about all the paperwork we need, though, until we go through that pre-approval process and find out. The reality is there's 4 people on this show right now. All 4 of us have different situations. So for me to get pre-approved versus one of you 3 and vice versa would be a different process. What documents I provide is going to be different than you guys. And so that's the thing. It's really not a one-size-fits-all solution. I know all the commercials on TV and on the radio make it seem like, especially, Rocket Mortgage, click button, get mortgage. It is not that easy. It's not like renting a car. You're borrowing hundreds of thousands of dollars. It's not that simple. I don't want to make it seem like it's super difficult either. You just got to follow the process. Get with your lender. If you don't have one, ask your realtor who they would recommend. And I also, let me throw it out there. If you're shopping on Amazon, one of the things you probably look at before you buy a product is reviews. So look at your loan officer and look at your realtor, look at their reviews online. If they don't have any reviews, well, maybe you should try and find somebody else that does have reviews so you know what you're working with.
Mm-hmm. Wow. Yeah, that's good stuff. I'm a little taken aback now. I'm like, wow, I need to go need to call someone to talk about my credit. Speaking of credit, what would be your, like, do you have any advice for someone looking to build credit, like the credit needed to buy property?
Yeah. So all too often, people don't have enough open lines of credit, and they don't realize that not having credit is just as bad as having bad credit. So we always recommend, start off with 2 revolving accounts. Revolving is something like a credit card, and at least 1 installment, which could be a car loan, a mortgage, a student loan. And if your credit score is low or you're not in the market for a car, there's lots of secured options out there too. You can go through your bank, and also on our website, we have a whole list for clients. Self-lenders are a really good one, but, start building some credit. That's going to take, 2-3 months for that to start reporting positively for you. Another thing that's really big is, if you do have open credit, you want all your revolving accounts. Once again, that's like credit cards. You want the total balances to be under 20% of the limits. That's the rule of thumb.
Mm-hmm. And you talked about student loans. Does that affect people negatively? Because I know there's this huge stigma around student loans. You're going to be stuck under that forever. Does that really affect things that much?
So if they're truly in deferment, they're fine. But if they need to be making payments and they miss a payment, yes, it does affect you. And it affects you past the credit world. If Doug wanted to get a client an FHA loan and they have a student loan in collections or a student loan they hadn't been paying on, they will not qualify for that FHA loan.
Oh, wow.
Yeah, that's important. I'll just piggyback on that for 10 seconds.
Go for it.
If you're borrowing money from the government for student loans and you're not paying them back, FHA loans and VA loans are also government loans. So they're not going to let you borrow more money if you're not paying them back. I mean, that's like if, Bogan let me borrow $10 and I was supposed to pay him back last week and I didn't do it. And then I call him like, hey man, I need $10 again. He'd be like, dude, you still owe me $10. So it's super important. You got to make your payments on time. You got to stay on top of your credit. I will go on my bill pay, through my online banking, and I will just double check every month to make sure I have not missed a payment on something. Sometimes you overlook the mail that comes in, right? And so I'll look, when's the last time I made a payment on my credit card, or when's the last time I made my utility payment? All of that stuff matters.
Mm-hmm.
One little trick I came up with, and everybody has different styles of what works for them, but I have reminders set in my phone on the 2 times a month I get paid to double check, what is due, coming up on each payday. And, it's kind of, you have fresh money in your account and you take care of it and you check it off your to-do list. And that works for me, having that little reminder.
That's awesome advice. That's good. I'm going to do that. Mm-hmm. But now, what if someone has already, missed a few payments with their student loan? Is there any way to come back from that, or are you essentially out of luck?
Yeah. So a company like mine, we can work to remove inaccurate or derogatory items like that. But you definitely want to get caught up and you want to start paying again. Doug, I recently heard that you have to have 9 consecutive payments on your student loan in order to qualify for FHA. Is that right?
As long as you don't have, so the challenge is if you're not making those payments, then it can go into collection. And that's where the problem is the government's written it off as a debt they're not going to get. So we had somebody a couple weeks ago, veteran trying to buy a house, VA loan, and we're going through the credit report, and I see on my side where it shows his student loan, it was grayed out. And so that's a red flag to me. And I said, it looks like this has been either transferred or it's not being paid. And he said, oh, it's been transferred. I'm making payments. So I said, all right, cool. Then we'll be fine as long as that's the case. And then we go to find out, going through the process, when we do our background check, we're under contract now to buy a house. He didn't realize that he actually hasn't been making his payments since February. And I went to school with this kid, so he's a good person, right? He was not trying to lie to me. At least I don't think so. And so with FHA and VA loans, there's something called a CAIVRS report. It's CAIVRS. And we have to run that CAIVRS report to make sure you don't have any outstanding government debt. And so for this person, he had that pop up on his CAIVRS report. If it's already been sent to a collection agency, chances are the only way to fix it is to get set up on a payment plan. But if you've already been on a repayment plan and then you stop making those payments, which is what happened with him, the only option you have at that point is to pay it in full. Ooh. So that's why it's so important to make those payments, whether it's, $100 or $200 a month. That's a lot better than being in that situation. He had to come up with like $13,000 out of nowhere. And thank God that, his family was able to help him with some money to pay it off. Otherwise he wouldn't have been able to buy the house.
Wow. And back to the credit aspect of it. I mean, whether it's a late payment on a student loan or a late payment on a credit card, payment history accounts for 35% of your score. That's the biggest piece of the pie.
Mm-hmm.
Is there a grace period if you miss a payment?
So they don't actually report you until you're 30 days late. Okay. So if you miss that audience by 1 or 2 days, you're okay. But if it's full 30 days, you're reported. Yeah.
Mm-hmm. That's awesome for the audience,
Something kind of cool, actually. But a lot of companies, especially credit card companies, if you've never had a late payment in your entire life with them, if you call them after a single instance and ask for a goodwill deletion, a lot of times they will take that one-time late payment off, as long as it's recent, the last few months, and you're calling and you're on top of it. But if you've done it again and again, you got to call me.
Just asking for like general information, for the audience, Sure, a lot of people are curious.
Yeah.
Awesome. So what about the pandemic? I know we kind of talked about it, but like, let's go deeper into that. How has that affected the market, affected your customer base, affected what you guys are doing in business as a whole?
Yeah, I have never been busier, actually. It is absolutely insane for me. I know, talking with Doug, he's been telling me the same thing, but right now we have like a absolute inventory shortage. So, I mean, like I was saying earlier, we can barely get to the houses before they're under contract with clients. So it's just super, super, super busy, super competitive. Every single house that we put an offer in was either at full price or above. Multiple bid wars. I mean, that's been the name of the game lately. It's just absolutely insane out there. Pretty much bid wars every single time, or it's drastically overpriced and sits for 6 months and no one even looks at it. But if you price it fairly at all, we're telling people, 2 weekends and we should be able to sell it for you. Wow. So yeah, it's hot right now.
I've experienced a lot more customers that are laid off or are just coming back from being laid off. But I think the biggest thing with COVID is the confusion. In the beginning, it was all over the news. If you call up your credit card company or you put your mortgage on forbearance, you'll be okay and it won't report negatively on your credit report. And I was like, I don't know about this, guys. This doesn't sound right to me. Because, sometimes when things aren't supposed to happen, they still do. And this is all uncharted territory. And just recently, I've started seeing it pop up on a couple credit reports. And it was 3 different clients. They all said they made the proper phone call. They said it won't affect you. You're going to be fine. We've deferred this for you. All 3 it reported as and not a natural disaster, but a declared disaster is what it said. Natural disaster is what you see during hurricanes. It's declared disaster. 2 of the 3, though, it did report negatively.
Wow.
Yeah, because I don't think they have the right way to key it in.
Yeah.
Which makes sense. Never done this before.
Yeah. So I think that for me, I'm going to continue to see effects of this, long after we ever get a vaccine or it ends or whatever the end scenario is for this, if there is one, because a lot of people, they put things in deferment and forbearance even when they didn't have to, because they thought, I'll take advantage of this. And I was saying all along, if you can pay, do it. Mm-hmm. And, now we're starting to see some of the effects just only now.
Wow.
And I'll add to that too. When you're putting your mortgage in forbearance, you don't, like Michelle was saying, you don't know how it's going to be keyed in on the other side. And I don't want to misspeak on how it could be classified, but it could be classified as a pre-foreclosure. And so you want to get your mortgage reinstated before that happens. And in most situations, everything will work out and you'll probably be fine. But what if you're one of the ones where it doesn't work out? And in addition to that, if you're in forbearance, I'd have to look at the guidelines to give a correct answer to this, but you have to have your mortgage reinstated and be making on-time payments for so long before you can buy another home or refinance. Being that most people have rates above 4%, and being that a lot of people qualify for a lower interest rate and have enough equity to maybe even take out some cash to do home improvements, invest with, pay off other high interest debt, why would you put your mortgage in deferral when you can refinance, save money, pay off other debts potentially, and just put yourself in a better financial situation? To me, it just doesn't really make sense. And a lot of times when we help people with a refinance, we help them skip 1 or 2 mortgage payments anyway. So that's what I would say the right thing to do is, if you truly need to put it in deferral, you lost your job, absolutely take advantage of those benefits. That's what it's there for.
Yeah,
but if you're working and you're just trying to save some money, then let's truly save you some money in the long run by getting you a lower interest rate and trying to save money that way. When your mortgage is going into deferral, you don't know, are they tacking on those payments to the back end, or are they extending your term? What are they doing with those payments you didn't make? Because nothing in life is free. They're not just waiving those payments. You're going to pay for it one way or the other. So let's just look into doing a refinance.
Mm-hmm.
And people not paying is affecting the entire, industry, banking, period. So now to protect themselves, a lot of credit card companies, due to inactivity, a lot of companies would close a card after a year. Now they'll close after a couple months of inactivity, and it's a way to protect themselves. They don't know if you're going to make that next payment. A lot of people's limits are getting dropped also without any notice. And it's another way of them protecting themselves. And Doug can touch more on this, but a lot of the banks for mortgages are placing a lot of overlays to protect themselves because they're not getting as many payments as they were.
Right. Yeah. On the servicing side, that's how mortgage companies make their money. Mortgage companies don't want you to go into foreclosure. We're not in the real estate business. That's what Bogan and his team does. We don't want houses. We want to give you money and we want you to pay it back. So I will defer to Bogan on this, but if your mortgage is too high, you cannot refinance, and you don't want to necessarily go into deferral because that's just kicking the can down the road, you probably do have a lot of equity, and it's probably worth just selling your home. We're starting to not hear about it often because, again, so many people have equity. But, if you're in a potential situation where you might go into foreclosure, contact Bogan or somebody on Bogan's team or somebody like Bogan that can help you sell your house. It's better to walk away with a few thousand or tens of thousands of dollars rather than just letting your house go.
Yeah, and we'd be happy to run any sort of numbers like that for people. A lot of people don't realize that we get paid strictly on a sales basis. So we're happy to look at numbers and do all. It's no cost to run a CMA to figure out how much your house is worth. We are happy to do it. And there'll be a link at the end if you are interested in anything like that to drop us your information. But yeah, we're here to help in any way we can.
Tell them what a CMA is.
A CMA, it's a comparative market analysis. So we'll look at all the homes in your area that have recently sold and just compare to figure out where you're at based off of not like a Zillow estimate or anything like that, but actual hard data from the local sales in your area. It's much more accurate than like a Zestimate or something you're going to go pull from like the county appraiser that's just guessing on what is going on. We're going to go down nitty gritty. Normally we're within a half mile, within 5 to 10% of square feet, looking at homes that are almost identical so that we can get you what the exact price is. Lately I have been super spot on. I just had an appraiser come in and I was like $500 off. So we're very accurate. We can get it done. And we're happy to do it.
Now, Bogan, what has been some of the changes that you had to deal with personally because of the pandemic? I know there was that time that people weren't really seeing each other and things like that. Have you guys done anything to adjust to the new norm, or has everything kind of gone back to normal for you?
Yeah, we had probably, I'd say 2 to 3 weeks where everything just kind of paused. It was really weird. Beginning of March, everything just kind of dropped off. It's really picked up again, back to normal. We're doing the social distancing. We're doing the limiting of stuff. So we're limiting showings. We're trying to do as much virtual and remote stuff as we can. We're all wearing masks and gloves and stuff. But we're really trying to get more into the technology aspect. So we're really pushing people towards it's a Matterport 3D tour, which actually, if you haven't checked out, is amazing. But you can actually do like a virtual walkthrough of the house from your computer. It's even like it works with the 3D goggles and stuff. So you can actually feel like you're in the property without having to go there, which is really, really, really cool. And we're just kind of trying to push stuff more like that. We've gone totally paperless here at my brokerage. So just, trying to do our part as much as we can, but especially with buyers, it's really hard to be as, social distant as we'd like, because it's your biggest purchase you're going to make ever. It's a house you want to live in. So obviously you want to see it in person. So we're doing as much as we can, a lot virtual, but we're still doing a lot of in-person stuff.
Yeah. Interesting. So as we're starting to gear down, because time's running out, the last final question really is, what's the most important part of the purchasing process, and what can someone do better to improve themselves so they can be prepared for that most important part?
Plan ahead. I think one of the challenges I see is people making emotional decisions instead of logical ones. Buying a house is a long-term investment. It's a long-term plan. And for you to kind of go at it on a limb and just because you feel like it one day, that's really not the best way to go about it. You want to talk with somebody to make sure you have all of your ducks in a row. You want to make sure that you are looking at homes you can afford, and you want to make sure that you have enough money for a down payment. I have agents that I work with that, again, the mortgage process is not fun, but it is one of the most important parts of the buying process, because without the money, you don't get to buy the house. And so many people want to go to open houses. They see a house they like. And I have agents call me sometimes and they say, hey, I just met Joe at this open house and he's ready to make an offer. And I'm like, oh my God, here we go. If you're just now thinking about it and you're trying to wing it, chances are it's just not going to work out, because again, it's the biggest purchase of your life. Even if you've done this 3 or 4 times in the past, now you're probably on your biggest house and your most expensive house. So I just think the most important thing you can do, start out with what Michelle said. The most important part of the mortgage process is your credit, your income, and your assets. So assets are not, how nice of a watch do you have, or do you have diamond earrings? We can't give you a mortgage just because you have nice jewelry. and like literally we have people though that ask that. And I think some people might ask their parents for advice, and depending on their parents' experience, maybe before 2008, when people were giving mortgages based on other assets and equity in other homes, that was a thing. Well, that also led to a housing crash. And so what I tell people is, as much of a inconvenience as it could be to send me your pay stubs and your W-2s, your bank statements, let me pull your credit, we do all of those things to make sure you really qualify. It's a short-term process in the grand scheme of things to make sure that not only you qualify, but everyone else qualifies, and that the house that you're buying today, let's just say you're buying a $300,000 home, you don't want 2 years to go by and then it'd be worth $150,000. You want it to be worth $350,000. So although the process can be a little tedious and sometimes frustrating, it's for all the right reasons, and it's to protect our investments that we have today so that they'll grow for the days to come.
Yeah.
Yeah, I would say my advice for people is, use your resources and use an expert. A lot of us, like as a realtor for a buyer, you don't even pay me any money and I represent you fully. But like this, again, is the biggest transaction of your entire life. These contracts are 12 pages long and they can be tricky. One word could be the difference between thousands of dollars for my buyer. And so if this isn't something you're doing day in and day out and you're used to doing, it's a very big, and it can be a very scary process. I mean, you can see there's 3 of us here, and this is less than half of the entire people that are going to touch a transaction. There's going to be another agent that's working. There's going to be a title company. There's going to be an inspector. There's going to be an appraiser. I mean, this process it takes 30 to 45 days at a minimum, and there's probably 10 to 15 hands that it has to touch and get approved by. And if it's not something you do all the time, it's hard.
It's hard for us, and we do it all the time.
Yeah, I mean, I pitfall and stuff that I got to go figure out all the time. And I'm almost 5 years in the industry now. So like, it's a difficult process, and like use your resources. That's what we're here for. And we are more than worth the value we provide. I would personally use a realtor myself if I wasn't one. I'm going to use Doug here in the next like couple months, just because like you need the help, even if you do it all the time. So if you don't, definitely find an expert and meet them now. I mean, have someone in your back pocket so that you're ready. Become friendly with the realtor that you want to use, even if it's a year or two away. Trust that person. Get someone you know. The same for your lender. I mean, the more of a relationship you can build with these people, the better they're going to understand what you're looking for, the better they're going to be able to help you. So just, again, be prepared and use your resources.
And let me just throw a plug out there. You know, if you're worried about your credit, get Michelle on the phone. Michelle, I'm sure you can share your information really quick. For anybody anywhere listening or watching, that's what I would do. Get with her, ask her questions, let her give you some advice. And if need be, she'll get you signed up. She'll help you. That is one of the most important things you could do.
Yeah, and I think that we live in a instant gratification, world now. You order something from Uber Eats, it's at your house in 40, 35 minutes. You order something from Amazon, it's there the next day. Buying a house isn't the same thing. You got to have some patience and make sure you're making the right decision and you're prepared properly. And, maybe it is 6 months, getting your credit repaired. Maybe you do need to save more for your down payment, but, be patient, get your ducks in a row and talk to the right professionals. And thank you so much, Doug, for the plug. I really appreciate that. But, talk to people that can help you so you understand what goes into the process.
Definitely. Awesome. You guys dropped great knowledge. I think I'm overwhelmed, and I think that's really good because I think it's a lot of valuable information I didn't know, and I'm sure our viewers didn't know. So thank you guys so much for being on the show. Before I let you guys go, I definitely want you guys to give your contact information, because one of the main points of the show is to connect young professionals, either if business-wise, just connecting different business networks, or even just someone who is looking to do what you're doing. So let's just go around and give out your contact information if you want. No pressure.
Yeah, that's no problem at all. My personal stuff, if you just want to go and find me on social media stuff, my Instagram is going to be Bogan buys the bay _ so it'll be Bogan _ buys _ the _ bay on Instagram. You can also find me Bogan Stitzel -realtor on Facebook. And also, if you do want a CMA, if you want us to reach out or you want to talk to us, we do have a little website. You're welcome to go to abetterliferealty.com/2020. That'll let you leave our information. That'll come to all three of us. So if you have a question for anybody, feel free to shoot it there also.
Awesome.
And I'll go next. It's Michelle Clark at Rising Point Solutions. My email address is mclark@risingpointsolutions with an S on the end.com. And if your credit score needs a spark, you can call Michelle Clark at 813-817-4545.
Yeah, and for me, if you would like to fill out an application to get pre-approved, you can go to my website. It is www.dougwagnerccm.com. Again, it's dougwagnerccm.com. Feel free to email me at doug.wagner@myccmortgage.com if you have any questions. But again, filling out that application would allow me to take a look at your credit. If I see challenges on there, I can refer you over to Michelle. And if everything looks good and you're qualified and able to get pre-approved, I can refer you over to Bogan. And even if you're not buying in the Pinellas County area, Bogan works in other counties as well and has friends all across the state. So if he's not able to help you, he can connect you with somebody that is. So, give us a shout. Let us know what we can do to help you.
Awesome, guys. Thank you so much. I saw someone in the comments, Mike, said all those valuable bonds. I completely agree. See, so thank you guys so much for being on the show. I hope you guys enjoyed the show as well. If you liked it, if you want to hear more from the next 2020 show as a whole, definitely like the Boca Tribune's Facebook page, subscribe to the Boca Raton Tribune on YouTube, and stay up to date on what's happening. Thank you all so much. I'm excited for all the information you guys dropped. And I hope the viewers come back next week. We have another great show lined up for you guys. So thank you so much.
Thanks for
thank
having
you.
us.
And
You were
thank you to the
awesome.
Bogan Tribune as well.
Yeah.
Of course. Thanks, guys.